Robinhood, the mobile stock trading app, has added 2 new cryptocurrencies. Litecoin and Bitcoin Cash have been added. They join Bitcoin and Ethereum. Now, Robinhood launched these crypto trading services back in February. Robinhood says their crypto platform is available in 17 U.S. states, but they expect it to be available in all of the states by the end of 2018. Now, there's certainly no shortage of these platforms to trade cryptocurrencies. You all know that. There's the largest U.S.-based platform, that's Coinbase, of course, but there's dozens of others out there, including Kraken, Poloniex, Bitfinex, Bittrex, both in and out of the United States. Any difference between these platforms? To me, the most important thing today is that Robinhood really offers a no-fee trading service. That's quite remarkable. Coinbase could charge almost 4%. Many of the other exchanges charge 25 to 50 basis points. Robinhood seems to be hoping that they'll get more customers in the door for other kinds of trades. They're likely selling those orders, by the way, to market makers and collecting some kind of fee. Now, whether Robinhood, which is an app that appeals primarily to more casual traders, can pull in serious crypto traders, that's the issue. It remains to be seen. The other platforms charge fees, but they're used, frankly, by more serious traders. Regardless, it's good news in general for everyone involved in the community because they're likely to see a bit more downward pressure on the fee structure overall. Keep in mind, this moves into the crypto space come even as Bitcoin continues to sell off. Remember, it's down more than 50% this year. Back to you, Melissa.
All right, Bob. Thanks, Bob Pisani. Were you surprised, BK, that there wasn't a better reaction in the price of Bitcoin Cash?
It's funny. It goes right to exactly how dour the sentiment is in crypto right now. If this news had come out in December, these things would have been up 10, 15% in the day. That news came out and people went, oh, there's nothing going on. I mean, it was amazing. It's very positive news in the long run for the sector. Robinhood has 5 million accounts now. Part of that is due to using Bitcoin and crypto as a loss leader. So in general, I think it's very positive, but I was disappointed in today's reaction.
All right. Well, back in June, we asked our next guest if he would invest his mother's money in cryptocurrencies. Here's what he had to say.
Yeah. Absolutely. And it's all about sizing appropriately. So even if you're the most conservative investor out there, right, just because there's a lot of volatility, the actual risk-adjusted returns are quite good relative to other asset classes.
Mom's always right, but maybe not this time. Bitcoin is down about 7% since that call. Joining us now is Christopher Matta, the co-founder of Crescent Crypto Asset Management. He's back. He's brought some more advice for his mom, all the other moms out there in the hodlers. What do you tell your mom? She's probably like, hey, son, what happened?
Look, I would say stay calm. This is a long-term investment, which is what I said last time earlier in that clip. And I think that's the main point. If you're bullish on this technology and on this asset class, you know, a 1 month period, there is a lot of short-term volatility. If you're looking 2 to 5 years out, which is what we recommend to all of our investors, the bullish sentiment hasn't changed over the last 6 months. Regulators have started to step in, but their general sentiment has been positive. And we think some more smart regulation in the space can be good. And right now we're trading in a tight band, and we think over the long term we'll continue to appreciate.
Are you worried that maybe the cryptocurrencies aren't acting like they used to act because there are certain structural changes to how they're traded? I mean, with the introduction of Bitcoin futures, for instance, that creates a whole other, you know, that may have dampened volatility on a permanent basis. I mean, BK was noting how the reaction in the coins that were added to Robinhood today, there was no reaction. They still traded lower. Things aren't trading as they used to trade.
Yeah, but the volatility has still continued to stay at a heightened level. It's not like it's tough to draw a correlation between the futures launching and then decreased volatility or downward trend. I don't think there's necessarily causation there. I think over the long term, additional products like ETFs and things can help increase the access to the asset class, which will ultimately be a positive catalyst for the space. I think right now we're just in a downward trend, which we've been in several times in the past in the cryptocurrency space. So anyone that's been in investing for the past several years has seen 70% pullbacks multiple times before. Like I said, if I was giving advice to holders, it would be stay calm, steady hands. If you're bullish for the long term, 6,000 is a decent entry point, and continue to hold.
So, Chris, what about new buyers? I mean, we need fresh money. A lot of the run-up that we had in November, December was the speculative frenzy, new retail money coming in. Yeah. What are you seeing from your fund stance? Are you seeing new buyers coming in, new investors?
We are. We're still seeing new investors come in that are interested in the space, and thankfully smarter heads prevail in that they see this pullback and see a better entry point. You know, you want to buy low and sell high. Unfortunately, a lot of people in the crypto space bought at 20,000 and sold at 10,000. Panic sell. And I think over the long term, as the infrastructure continues to get built, that's one of the biggest key pieces. As ETFs get launched, as there's options that are available, as the custody piece gets figured out and the infrastructure around security continues to improve, that will help bring not only retail people into the space, but also the institutional money that's kind of been sitting on the sideline waiting.
If scarcity value was the reason to own Bitcoin pre-futures, did futures market basically diminish that scarcity value and take one of the catalysts away? I think that's what happened with gold, by the way, with the gold ETF. I don't know if you can make that comparison, but that's my view.
Although that's physically backed, isn't it?
Well, that's a much yes and no, quite frankly.
No, I think the scarcity is still there, and holding the underlying Bitcoin, you're going to get, unfortunately, all the forks and things that come along with that it makes it more complex to hold the futures, which aren't physically settled. That's why I think ETFs that are physically backed or digitally backed by Bitcoin will be a huge impetus for the space. But no, I can't make that connection, at least at this point.
All right. Chris, we're going to have to let you go. Thank you so much. Good to see you again.
Thanks. Appreciate it.
The argument I understand in terms of hodlers have seen these drawdowns before, but at some point, as a trader, if you're in this and it's not a 5-year trade, it's something a little bit shorter term. At what point do you say, you know what, I've seen 70% already.
As a trader, if we're independent of what the underlying asset was, you go in first of all with a stop loss or a risk level, and based upon the underlying volatility of the product, you give yourself a little rope or a lot of rope. You need a lot of rope here. And every person that comes on that's an advocate of Bitcoin or the crypto space says, look, we're 5 or 6 years into a period where this is not in any way unnatural to what we've seen. What's interesting, or what would be interesting, Brian, what changes this thesis when every guy can come on here and say, you know what, I've got a lifetime to see this go higher?
Well, what changes the thesis is fresh money coming in. That's why I asked about it. So we know that Fidelity is probably...
What turns it bad?
What turns it bad?
So you guys can't show up anymore and say, you know what, in 2 years it's going to be higher. I don't care what it does before then.
Well, I mean, you have just more sellers coming out of the woodwork, right? You don't get all those catalysts. You don't get an ETF. You don't get retail money in. You don't get institutional money in, and people just give up. I mean, remember that Bitcoin, while there is scarcity value, every 10 minutes, 12.5 Bitcoin are printed, and the miners sell, let's call it about half of that roughly. So there's a constant supply of Bitcoin here without new capital in and nobody buying it. That could turn it negative.
In terms of your question, like when do you bail? I think the question is really when you go in, how much do you go in with? And we talked for a long time about having it be a very small part of the portfolio, knowing that it could be 10 times or zero.
Right.
And so to me, I'm happy to sit with a small bet.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.